Hello, everyone. Thank you so much for joining us for our Mortgage Monday Minute with myself, Alex Ward, broker owner of Maxwell Devonshire Realty, and the Linda May Tonko of Scotiabank Home Financing Advisor with Scotiabank. Today, she is joining us to tell you about the first C in the five C's of credit, which is character. And what does it actually mean for you, and how does that impact your mortgage approval? Well, Linda May is here to tell you, and Linda May, the floor is yours.
Hello, everyone. I hope everyone had a happy new year and a good holiday season and was able to get some rest in because it is going to be a very busy spring. I know I'm already seeing it on my end. I have so many pre-approvals right now. It's a bit crazy. But I wanted to go into the five C's of credit. We talked about it last week, just as an intro, or I guess 3 weeks ago as an introduction. So the five C's of credit, just to go over that again. The first one is character. The second one's capacity. Third is capital. Fourth is collateral. And the fifth is conditions. So the first one today we're going to go into is character. So basically, character is, well, mostly it's your credit score and how you utilize credit. But it's also just in general, what is your character? What does it look like? What, your income sustainability, all the kind of general character that allows the underwriters to view kind of your character. The main one, of course, is credit score. And we as an institution like to see credit scores, 680 and over. Not saying that we're not going to do an application for someone with under a 680 credit score, but 680 means that your credit is healthy. So some of the things that we're looking at in your credit score, well, some of the things that your credit score is made up of is credit utilization, payment history, length of credit history, the amount of inquiries that you've had over, the time that you've had your credit, or even in the short term, and then the type of credit that you hold. So to kind of break it down, 30% of your total credit score is utilization. So if you're always at the top, like maxing out your credit cards and maxing out all of your debt, your utilization numbers are going to be like you're not going to have very good percentage on your utilization. 35% of your score is made up of payment history. So if you have late payments, that's going to impact your score. 15% of your credit score is made up of the length of time that you've had credit. So, if you've had credit for 20 years and your utilization is low and your payment history is on time, your credit score is going to be quite a high number. And then 10% of that is inquiries. I have a lot of people that ask me, I don't want to hit my credit too many times, which is a good thing. So, maybe they don't want us to pull a credit bureau for a mortgage application. What I tell people is uh, pulling credit for a mortgage application is probably the least of your worries. If you're having your credit pulled for every single credit card that you're offered, that's where your rated or your score is going to lower. And then the other 10% is the type of credit that you have. So if you have, 7 credit cards and they're all maxed out and nothing else other than that, then we're going to look at that a little differently than if you had, say, a car loan that you're paying regularly and, a couple, maybe 1 or 2 credit cards that are all, within a utilization limit. And then maybe you have a student loan or you have another mortgage. Those are all types of credit. So all of that makes up your score. Now, some of the ways that you can bring up your score, let's say if you have a weak score, would be to make sure that your credit utilization is under that 65%. So let's say you had a, credit card of $5,000. You want to keep your amount that you're putting on it to that 3,000 limit. You can pay up to 5,000, but then bring that limit back down, like pay it off under that 3,000. That's going to boost your score. If there are any collection showings on your bureau, you want to get those paid. I've had people who have had a parking ticket that they're unaware of, and they've paid off that parking ticket and their score has jumped 30 points in 30 days. So those are all ways that you can impact your score, and they're all minor things, and they'll actually bring up the score quite quickly. If you have, multiple credit cards, you may want to consolidate it and just have the one or the two, rather than having, 7 different cards. Um, that is really kind of all I had for character as far as credit. Next week, we will go into the next one, which is capacity, and we'll dive into that one with detail. But if you have any questions about credit, even if you have weak credit, I can help you build a plan and we can work towards moving forward. It's the little things that you do that will impact your score.
Yeah, consistency is the key to success. So make sure that you have the right plan to ensure that you are on the right path to make sure you have a good character and credit score so you can get those mortgages. This was Linda May Tomko of Scotiabank Home Financing Advisor, and she was today talking to you about credit and the character of the 5 C's of credit. Tune in next week on Monday at 9 a.m. Mountain Standard Time and make sure to smash those like and follow buttons so you can get all of our updated content. See you later, everyone.
Guys.